Welcome to the channel Get Rich. Today we are going to look into top 3 stocks to buy now or accumulate in this current market. So let's get started. So I have discussed this particular stocks in my free newsletter as well few weeks ago, a week ago. So if you are interested in free newsletter, please subscribe to the newsletter in the description below. So let's get started. So today the top three stocks. So two of the stocks belongs to AMC sector and one belongs to the pharma sector. So let's get started. So the first stock in our list is HDFC AMC. So HDFC AMC has a market cap of 49,000 crores and the current stock PE, which is trading at around 36. So it has a return ratios of about 40% and return on equity 30%. If you look into the debt to equity, it has no debt. AMC business is a very good business asset. It has an asset light model. It has a very good return ratios. Less capital is required. So it usually trades at a much higher P. So let's have a look at its price action. So if you have a look at its price chart, it almost reached about 3,800 at some point and it came back to about 2,100 rupees. So if you look into the price chart, it already hit two times the price level of 2,100 in I think 2020 and also in both in 2020, and currently it again reached about 2,100. So I am more of a fundamental guy, not much of a technical fan, but still technicals will help us to enter into the particular stocks if you have very good fundamentals. If you look into this stock, this particular time is looks very interesting in terms of technical and also in terms of fundamental. So we had a very nice pullback, more than 50% I guess, or about 40% to 50%. So let's have a look at its PE ratio. So if you look at the PE ratio, currently it's trading around 36. As I said, the average PE the stock is trading around historically was about 45 PE. It even traded at 66 PE at some point. Currently it's trading at around 36, which is one of the lowest point it has ever traded in its history. So it looks like a very good opportunity, but let's have a look at some of its fundamentals, how HDFC AMC is doing. So if you look into this individual folios, so it had in December 2020 it had about 93.8 million and it about 120 billion in December 2021. It has a nice growth. And if you look into the overall monthly average AUM, it also growing, and their share of individuals is increased from 52% in 2020 to almost 55% in 2021. So then if you look into the SIP, so the SIP flows is increased from 84 billion rupees to almost 113 billion rupees. And if you look into the SIP AUM as number of SIP account, it increased from 34.7 million accounts to almost 49.1 million accounts in December 2021. And if you look into the market share of HDFC for if you look into the quarterly average AUM, so average AUM its market share is decreased from almost 13% to 11.7%, and the closing AUM you can see it almost decreased to 11.6%. So it is losing market share. So HDFC is losing market share for the past 2 years. So I will address that in some time. If you also look into the HDFC mutual fund share in mutual fund industry, for example, so they have unique investors, so 5.4 million unique investors out of 21.5. It's at 25% in December 2020, and in December 2021 it reduced to almost 19%. So the market share, HDFC market share in unique investor is reduced from 25% to almost 19% currently. So it's also losing market share. It's not adding much customers as it were, as the industry is doing. If you look into the individual assets market share, HDFC mutual fund has about 13.8% in December 2020 and it reduced to 12.6% in December 2021. It reduced from the first position to second position, and ICICI Prudential is gained one position from second to first. So it is clearly losing market share. So before looking into the financial statement, So if you look into the recent conference call, so the management was discussing about why they are losing the market share in HDFC AMC. So they are mainly losing market share because they don't have a lot of thematic funds and yeah, sector based funds. For example, technology fund has gained a lot of yeah, amount of money inflows in the recent times, but they don't have a lot of thematic and sector based funds. So that's a big category, I think, of almost 95,000 crores, but they have only 1,000 crores. They recently launched thematic and sector based funds. So recently they are launching a lot of funds, so they are looking into it. So for the past 2 years they are losing market share, but they are already aware of it and they are aware of the reasons, and they are in the process of rectifying that. So I believe in the HDFC AMC management to rectify this, and then they are back to growth in the market share. Also, they will be able to gain market share in the future. That's my hope. So they will turn around. They are already launched a lot of new funds, thematic based and also sector based funds. They are also looking into passive funds, and they are also doing a lot of yeah, new funds they are launching. So that is good. So they are aware of the market share yeah, losing, and they are taking actions. So that's good. So I believe they will turn around their market share losing streak to gain in market share in some financial years to come. So if you have a look at their financial statement quarter over quarter in December 2021, so they had a sales of 550 crores and they are doing net profit of 360 crores, which is highest quarter revenue. So they are doing about 360 crores in December 2021, and they did 344 crores in September and 345 crores in June. So if you look into the year over year financial statement, so they increased their net profit from 478 crores in 2016 to almost 1400 crores in 2022. So that's good. So their compounded sales growth is about 8%, and their profit growth, compounded profit growth, is about 23%. So they are having a very good return on equity, 35%. That's good. So if you look into their balance sheet, so they are also increasing their balance sheet. So they are paying about a dividend of 50% of their net profit. They are giving us a dividend payout, and then remaining 50% they are using it to strengthen their balance sheet, and they are also using this balance sheet for investments. So they are increasing their investment more and more. For example, in March 2018 they had about investment of 2000 crores. In September 2021 they have about 4800 crores as investments. So if you look into what are they are mainly investing, so they are mainly invested currently in the recent quarter. They invested in debt and liquid funds. So they are generating other income from these particular investments as well. So over time they can be able to increase revenue from this particular investment section as well, because this is going to increase from yeah, they are mainly investing in liquid and debt funds. But if they can if there is an opportunity, if they can invest in equity funds, they can grow their investment, and also they will be year on year they are also generating profits, and they can put it back into investments, and in time they can get more revenue from this particular section as well. So then if you have a look at their shareholding pattern, so their shareholding pattern, they are holding steady. I think recently they are one of their promoter sold shares, but that's not HDFC. I think Standard Life Insurance, I believe. And also if you look into the mutual fund holding, they reduced their holding, and recently they increased their shares. And if you also look into the FII holding, they are also slightly increasing their shares. So this is my first share, HDFC AMC. I think it's in a very good buy zone now, because it's currently trading at a very low range, for example 2100. So if you can use this opportunity to buy this share in long term, you will be rewarded very nicely. In a risk to reward standpoint, this stock is in a very good attractive valuation to buy now. I think it's just a matter of time. It goes back above to higher P's, and it can easily deliver 100% in 2 to 3 years time. That's my personal expectation. And the second one, which is second AMC, so which is Nippon India AMC. So if you look into the Nippon India AMC, so they have about 3.5 trillion asset under management. Out of that, mutual funds 2.7, and then they have managed accounts 590 billion, and international they also have 87 billion. And if you have the locations, you have 270 plus locations, and then they have and 60 employees, and they have about 83,800 distributors, and they have 15.2 million folios. And also, if you look into their recent numbers, for example, quarter 3 quarterly average AM, which has an increase of 32%. And if you look into the share in industries B30 folios, which rose from 10.4 to 11.6%, their overall market share, quarterly average market share, which increased to 7.34%, up 22 bips. And also, if you look into their unique investor base, they increased 61%. They just added about 3.1 million investors in 9-month financial 2022 compared to 7.8 million investors in the industry. So that's huge. They have a lot of they're adding a lot of unique investors in this particular segment. So that's very good. They are adding unique investors. We will see in time how many percentage of unique investors they have. They have a very good chunk of unique investors in their AMC. So if you have a look at their snapshot of Nippon India AMC, they have a market cap of about 21,000 crores, and they have a stock P of 29.1. And if you look into the debt to equity, they don't have any debt, and the current ratio is 2.28. And also, if you look into their return ratios, the return on equity is 24%, and if you look into the return on capital employed, which is about 31%. So they are doing pretty good. So if you look into their price chart, so they haven't come down as much as HDFC AMC, but still they had a very decent correction. They are down from 450 rupees to currently I think 340, 330, 340 range. So that's also very good. If you look into the technical standpoint, that's a very good support trend line we have. So it's also a nice time to accumulate. If market doesn't do adversely, goes down, or market correction happens furthermore, it's a very nice buy. Even if it falls more, you can gladly add more because it's a very nice company. It has a very good growth ahead. So if you look into their P ratio, so currently it's trading around 29. So average P is about 31, 32 in this company, and it even traded about 48, 49 in 2020. So we have a lot of headroom for P growth because it's also in the lower end of the P range where it was trading historically. So if you look into the growth of Nippon India, so as you know, Reliance sold its entire share to Nippon Life Insurance, which is a MNC company. So after they acquired controlling stake, so they have about 74% stake now, Nippon Life Insurance, and they are doing very good. So they are turning around. They are losing market share. They are gaining market share. They are doing pretty good, I would say. So if you look into the new digital purchase, they reduce 12 seconds every 12 seconds digital purchase to almost 7 seconds. And if you look into the SIP purchase, it reduced from 20 seconds to 15 seconds for every SIP purchase. And if you look into the new folio added, it reduced from 20 seconds to almost 3 seconds. And new ETF folio added every 16 seconds to 3 seconds. So they are growing fast. And if you look into their SIP accounts, which are continuing for more than 5 years, they are doing much better than the industry. And then if you look at the market share of, for example, unique investors, as I said, so they had in December 2020 almost 28.7% of the total unique investors they have as the market share. So that's a huge market share. They have huge unique investors base. So it increased from almost 28.7% to almost 32.5% in December 2021. Almost 32.5% of the total unique investors they have in their AMC. So in December 2021, almost it's about 30.5 million investors which are in the industry, and they have about 10 million unique investors in their AMC. So that's huge market share, 32.5%. And if you look into the total folios, it's 12.6%. And if you look into their quarterly average asset under management, that's 7.3%. That's still big down. I think the top one is about 12.9%. So they are 7.3% in the quarterly average asset under management. And if you look into the B30 folios, it's 11.6% market share. ETF folios, they are the market leader in ETF folios. So they have about 59.8% folios in ETFs in December 2021. So if you look into their passive funds, what are the different passive funds they have? So they also have a variety of passive funds. If you look into their passive funds, because some investors are more and more investors will also look into passive funds, because not everyone wants to invest in active funds. But on the flip side, passive funds will not have a higher margin, I would say, because active funds they can charge fee more, but passive funds is yeah, the profitability is less, but yeah, they are having a lot of passive funds in their AMC as well. So if you look into the fixed income, they have a lot of a set of passive funds, and if you look into the equity domestic broader market, they have ETF Nifty, ETF Sensex, ETF Nifty 100, Nifty Mid Cap 150, Sensex Nifty 150, and they have a lot of small cap, mid cap thing. And if you look into the sector funds, they also have bank, PSC Bank, Nifty IT, Pharma ETF, Auto ETF, and also they have different thematic based. And they also have they recently introduced international funds. I think Nippon India ETF, Hang Seng PES. So they also recently launched. I think that's the active fund, Taiwan based investment fund. And also, if you look into their pipeline, what are their new funds they are going to file, what are their pipeline. So if you look into that, so they have Nippon India Innovation Fund, they have Nippon India Nasdaq 100 Index Fund, they have Nippon India S&P EV Index Fund, Nippon India Artificial Intelligence Fund, and then they have Nippon India Bond, and they have Nippon India S&P Europe 350 Index Fund. And if you look into their Nippon India Nifty Alpha Low Volatility 30 Index Fund, so they have a lot of funds which are coming in the pipeline. That's very good. So they are introducing more and more funds. I'm more interested in Nippon India AMC than HDFC AMC, because HDFC AMC is losing market share. I believe they can turn around, but that's still I'm hopeful. But Nippon India, they are doing very good. They are turning around, so they are increasing their market share. They are introducing a lot of funds. They are doing a very good job. So I'm pretty happy with Nippon India AMC what they are doing. And it's also now in the MNC parent company, the Nippon Life Insurance. So that's also they can trade at much higher P valuations than before. So it's also trading cheaper when compared to HDFC parentage. So HDFC was trading around 36, Nippon India was trading around 29. So that's, I would say, for AMC company 29 is yeah, I would say it's under much lower and pretty cheap, I would say. And if you look into their ETF section, they are the market leaders. So they have 69% volume share, 60% folio share. They have 13% market share. So if you look into a lot of their yeah, volumes in Nifty 50 ETFs, Nifty Bank ETFs, Gold ETFs, liquid ETFs. So they are way ahead of the competitors. So even though I don't know how much profitable ETFs would be, I think it will be much less profitable when compared to active funds, but still they are the market leader in this segment. And if you look into their financial statement in December 2021, they had 339 crores and sales, and they have net profit of 174 crores. And if you look into their year-on-year sales, they increased from 951 crores in 2015 to almost 1,271 crores in 2022, it's expected. And their net profit is going to be about 740 crores in 2022. So they did 680 crores year above, and then 415 crores a year before. And also, if you look into their sales growth, yes, the sales growth, because things changed how they account the sales. So I think better to look at the profitability growth. So the profitability growth is 11% 5 years CAGR, 14% in 3 years CAGR, and they are also doing a 21% return on equity. That's also good. If you look into their balance sheet, so they are also increasing balance sheet, but they are paying out much higher dividend payout, because they are almost doing 75 to 80% dividend payout. HDFC AMC was doing about 50%. So they are giving much as a dividend than having as an investment. So they are also slightly increasing their investments from 1,290 crores in March 2019 to almost 2,800 crores in September 2021. And if you look into their shareholding, though mutual funds are selling or not selling or buying in the recent quarters. And if you look at the FII, they are increasing their shares in Nippon India. So that's good news. And then before going into that company, so Nippon India AMC, yeah, I'm more confident in Nippon India AMC than HDFC, though HDFC is a much higher, better brand than Nippon India AMC. But the performance, current performance, Nippon India is doing much better than HDFC AMC. So I am more confident of buying Nippon India AMC than HDFC AMC. So I'm more bullish on Nippon India AMC. I believe the analysts are expecting to reach in 2 years, they can hit about 1,000 crores net profit. So if they can command 50p, if the market goes up, if they can command 50p, they can even go 50,000 crores, or even 40p, they can do about 40,000 crores. Currently they are about 20,000 crores. So I can see this stock can double in 2-3 years. It's a matter of time before it gains traction and goes up. So I believe this also has a 100 to 150% gain opportunity to in this particular stock in the next 2 to 3 years. So then the third company is Granules India. So this is currently facing headwind. So the first two stock, HDFC AMC and Nippon India AMC, these are it's a current buys. You can buy now even heavily, no problem. They are almost trading at a rock bottom valuation. But Granules India, I will not say that, though it has a very good long-term opportunity. It has a very good growth potential long-term, but in the short term it's facing headwinds. So its margins are hit due to price pressure and also due to some unavailability of raw materials. So in the short term it's going to see some pain before it recovers, but it's a slow accumulation. If it drops more, you can buy more. So it's I would say it's a slow accumulation, this stock, than when we compare the past two. So if you look into the market cap, it's 8,000 crore company and it has a PE of 16.7. And if you look into the return on capital employed, it's 25.4%. Return on equity is 27.4%. Debt to equity is 0.41. That's not so high, also not so low. So it's okay, 0.41. And then if you look into their current ratio, it's 1.56. Price to book value is 3.36. That's okay. And if you look at the price to sales, it's 2.35. That's if you look into the price chart of Granules India. So it was doing pretty good in the recent times. So I first covered this stock, I think 2 years ago, and my average buying price was around 80 to 100. So it ran up a lot to almost 430, 440, and then it came down to 300. So it find a short-term bottom at around 300. If you look at that, 300 rupees was about a good support. And also if you have to have nice trend line, which is having a resistance trend line. And I think it's a long term, it's a very good potential company. So let's go look at the PE and the fundamentals of the company. So if you look at the PE, so the average PE was about 14 to 15. Currently it's trading about 16 to 17. So it's not below average. And it even traded about 25 to 30 at some point when it had very good rally timings. And if you look into the financial statement quarter over quarter, so in September 2021 they had about sales of 888 crores. Their margin hit huge because of pricing pressure and also raw material unavailability, and so they could not pass their price increase, raw material price increase to their customers in this quarter. Maybe in the coming quarters they can pass the price to their customers and then their margins can improve, but in this particular quarter their margins hit badly, so their net profit is reduced to 80 crores. In the last quarter they was doing around 160 crores almost, but they could not do that much. I think in the coming quarters they would improve in 1 or 2 years, but in the coming quarters I think their margins will still be hurt. So that's why I said it is facing headwinds in the short term, but in the long term it's a very good company to hold. And if you look into their year over year numbers, so they are doing phenomenal. So if you look into their sales growth, they are doing 21% 10-year CAGR, 38% profit growth 10-year CAGR, and then the stock price also went up pretty good. And return on equity is doing about 20 to 25%. That's also a good one. And if you look into their shareholding pattern, so their promoters are having constant shareholding. And also if you look into the mutual funds, they increased quite a lot. A lot of mutual funds bought this particular company in the recent quarters. So from December 2020 to almost December 2021, almost 4% of the company is bought up by 4% change in the mutual fund holding. So mutual funds are buying this particular company. And if you look into the FIA holding, it's haven't changed much in the recent quarters. So Granules India, I would say it's a long-term hold or a long-term buy. So it's not an immediate buy because, as I said many times, it's having a short-term pain. So you can slowly accumulate this stock for long term. So this is a very good company, growing nicely. They also have a lot of technologies. They want to implement state-of-the-art different technologies, and they want to do backward integration in the coming years. So that will also further increase their margins. So it's a very good company, and they I would say it's also a pretty good buy. But yeah, you have to have a long term overview for this stock. So these are the top 3 stocks to buy now in the current market. So if you like this video, like, share and comment, and if you are new to this channel, please subscribe this channel. And if you want to have a free newsletter from me, so because I sent out these newsletters with few other companies in a week ago, so it's a free newsletter. If you want to subscribe this newsletter, please subscribe in the link below. So thank you for watching and have a nice day. Bye bye.